Let's go around the table, talk about sort of put, policy to action. Tim, your take on the Fed today.
It was a hawkish cut. There was no drama. In fact, that's what we wanted. It's what the market wanted. It's what the institution of the Federal Reserve wanted. And I think if you look at what the market had priced in, it had absolutely priced in 25, but it was inching for more than 2 rest of year and 1 in 26. I don't think it's a disaster. The downgrade of the labor market, also no real surprise here. But when you hear that from the Fed, and what we all say all the time is that a growth scare is something that would be a lot more powerful than the Fed not doing another 25 or 50 basis points. They didn't say that. I'm kind of happy we got this one out of the way, because I actually think this was as uneventful outside of what it is for the institution of the Federal Reserve. And I thought, Bowman and Waller did a great job.
Even with the Myron call for half-point
What
cut?
did you expect? I mean, I expected that. Or I expected an outlier, and that's what we got. Everyone else voted in line.
Yeah, I think those two folks that dissented in the last meeting, I think it's pretty interesting that they didn't dissent this time. It was such a big deal. We hadn't seen 2 dissenters in a very long time. That was kind of the narrative when you looked at that last meeting. So at the end of the day, I think they kind of did what they did, or needed to do. They signaled, what is going to be the case. I don't think there was too much expectations that there would be that much more than 75 basis points this year. I'm actually a little surprised at just 2 expected 25 basis point cuts next year, but they seem pretty much in the camp that their dual mandate is fairly balanced right here. And, I just think of this. The stock market basically closed flat. The 10-year yield closed flat. I mean, this is the sort of market we're going to be in. I think that PCE that's coming up is at the end of next week. I mean, might that be something that folks are, concerned with? We saw the inflation readings over the last 2 weeks. We just didn't see any stock market volatility in around those sorts of things.
Yeah, but we have an S&P, Dan, that's up, I think, and don't at me, as Guy would say, 10% over the last 3 months. So was it a buy the rumor?
We also had gold. Gold has gone up 11% in that same time period. When's the last time we could ever remember that gold has gone up in tune with a huge rip in the stock market? So there is some stuff going on under the surface.
Yeah, and rates did come down ahead of this, to your point. Right, we saw yields come down basically 10% in the last 2 months, from the 30-year down to the 2-year. So I think there was a lot of preloading, front-loading on this. Yeah. I think there's going to be more 25 basis point cuts. 3 in a row. Maybe we'll get that. But just remember,
May, only seven people called for no cut.
Yeah, but things change. Expectations change on a dime. And let's remember, May 2026, Powell's not going to be there. So I think the more you get closer to that or head into that date of May, the more dovish the Fed actually becomes, and those dissenters probably get louder.
Yeah, because, Michael, I'm going to say something now that's going to offend approximately 99% of our audience.
Which isn't something, not terribly new for you.
It's not everybody.
Not terribly new.
Yeah. Which is that if you're running a hedge fund or you're Goldman Sachs, you're any of your clients, if you wait till the Fed actually makes a rate call to say, oh, let's now buy stocks, you're done. You're fired. You're finished. Wall Street did not wait. For weeks, they've been buying bonds, bringing yields down, buying gold, buying stocks.
Yeah, I'm going to be a little bit of the party pooper here. Every time the Fed cuts rates because of poor growth, you don't basically have a durable rally until they get well below neutral and you're actually stimulative. So unless you think they are now below neutral and that they're only cutting because of some sort of immaculate disinflation, you shouldn't actually be buying today's cut.
No one really. Small caps a little bit.
Well, not only that. Well, you have to think about the rally that we've seen has been anticipation of this cut, right? So it's already happened. The rally because of the cut has happened. In my view, Chair Powell indicated that he's caught between a rock and a hard place. And I think that was actually a pretty bearish message. He basically said, listen, guys, this is an insurance cut. This is not the start of a new cutting cycle because we can't, because we're worried about inflation. And that's not necessarily positive.